Hello and welcome, everyone. Good evening. If you're in the house, let me know, drop a comment. Moving into tonight's topic, which is velocity banking and infinite banking predictions. These are going to be my opinions, my thoughts as to what I see that's happening in the industry overall. Some things that we should be aware of if you're someone that is practicing these concepts, these strategies. If you're actually implementing them or you've been doing it for a couple of years, or maybe you're just starting out, I want you to be aware of some things as we close 2023 and go into 2024. I believe there's going to be some really cool opportunities in this particular space. And then there's some things that might seem alarming that it's just important to be aware of that, hey, this absolutely can happen. And here's how I would go about handling this type of challenge or obstacle if it arrives at my doorsteps as it relates to my personal finances, right? So we got 7 people in the house so far, more tuning in. Drop some comments. Let me know that you're here. Let me know my audio's good before I go any further. 13 people now in the house. Let me get some comments going. Let me see what you guys are saying. Just want to do a quick audio test here before we get started. Not seeing any comments come in just yet. Wait for that first one to come in and we will get started. This will be one of the last live streams that I do for the year. Super excited for 2024. I'm super excited to be hosting my first live event this Saturday. Those of you that are watching right now live, and we're going to be in South Florida, we're going to meet for the first time. Go ahead and drop a comment if you're attending the event in person. Let me know if one of you guys are here. And if you'd like to watch the live stream, it's going to be a hybrid event, so in person, and you can attend virtually, right? So the virtual ticket option is still available for purchase, right? And I'm just super excited, also super nervous. But I believe we're going to be discussing some valuable things that we can just take our finances to the next level going into 2024, right? Okay, perfect. Audio is good. So shout out to Delights. Pleasure to have you here. John, hello. Funding Guru. Hello, hello. Thank you for being here. So let's dive right into it. Okay, here are just some things that I personally see. That's what's going on in the velocity banking and infinite banking space, right? So 2024, I've been watching a lot of high-level entrepreneurs, content creators, different gurus that touch on the macro financial economy of the United States, and many of them are in alignment saying that we should expect some sort of financial crisis in 2024. Now, what that would look like, in my understanding, for average, everyday Americans that say don't have a business, okay, you don't have a business and maybe you're not, investing a whole lot of money yet, maybe you're not really in real estate, but you're someone that has a career, has a job, maybe you have a home, a mortgage, you got some debts. I think a financial crisis that's going to affect you the most, those that have jobs or careers, the biggest thing that would affect you is either real estate prices going down, so you having less equity in your home, which would mean less access to leverage in the event that you need some extra money. I see that. Or a potential job loss, because businesses, major corporations are hurting, banks hurting, the commercial space hurting, and they're going to lay off people to lower their overhead, keep their stock prices at a decent, rate so that they can keep getting funding from the investors, right? So on a macro to micro level, in terms of your personal household, your economy, for people right here, most of us watching this channel, right? I know most of my audience are not entrepreneurs yet, but desire to be, or don't have businesses yet, but you desire to have a business. And right now, your main focus has been building up your credit, building up your savings, paying off debt, becoming a better steward over your finances, building that discipline. The biggest threat in 2024 to you is specifically losing your job, right? And so I think there are some tactical, logical moves that we can make as employees to increase yourself as an asset more than a liability to the company that you work for, to reduce that chance of you losing your position, number one. And then two, considering acquiring a new skill, right? Or honing in on some skills you already have, but doubling down, right? Or potentially pivoting into a new industry that you might actually enjoy doing, that might actually end up paying you more money, right? All these different things that I believe is going to be very, very relevant to those that are watching right now, catching the replay, right? For the entrepreneurs in the room and the business owners like myself, I believe, especially those business owners like me that are B2C, so you're marketing directly to customers that feed your business. So in my case, I'm a content creator, I'm a consultant, I'm a coach, I have courses, I have programs, different things like that. And this is how I generate income. So I create valuable content on social media, teaching people how to, learn these strategies, say velocity banking, infinite banking, debt snowball, becoming a better steward, knowing your numbers, how to stay cash flow positive, all these very, very helpful things completely out there for free. I have a monetized YouTube channel. So the more people that watch my channel, the more potential revenue I can make through monetization. That's one stream of income. Then that viewer, say you guys, loyal people watching, 25 people in the house right now and increasing, those that are very, very loyal, you subscribe, you've been getting value from the free content. Some of you then take the next step and you fill out a contact form, or you get a hold of me, you email me, you say, hey, I want you to help me. I want you to help me in my finances. And then you invest in yourself, in me, hire me to help you. Boom. That's another stream of income. Then I help you, right? We draw out timelines. We do a whiteboard session. We map out the numbers. We help you get out of debt. We help you increase your credit, right? Increase cash flow, become a better steward, do all these things. Great. Then you get to the point where you're like, hey, I think I want to, get into the social media content creation space, or I'd like to start this business, or I'd like to get a cash value life insurance policy. Boom, another stream of income for me there, right? And it keeps stacking and stacking and stacking. Well, if there's a financial crisis, I can potentially see a either decline in people investing in themselves, say new clients. It'll be, say, slightly harder, maybe more difficult to acquire more clients because people simply don't have the money. So what I'm doing personally in my business, and hey, this may not apply to everyone's business, right? But maybe some of you in the room here, and I'm rolling out a service in 2024, and this is something that I did in 2020, but not publicly. Like I didn't publicly just put it out there. It was more of an internal process. But basically, I'm going to be naming it. This is like my public process system. I already announced it to my private community in Finance Geek Ministry, which is a ministry of finance that helps people, get their finances in order. And I do that completely for free, right? Just like I do on the YouTube channel, but I'm live, right? So the program I'm going to be rolling out in 2024 is really Help Now, Pay Later, okay? And this program really applies to people that say, maybe we're doing good, but then they lost their job. So say, for example, you got a husband, wife, and wife loses her income, so now it's just husband, and there's a 50% drop in income in the household, and so they were doing okay. They were watching the videos, and then they reached out and they say, hey, Denzel, I just lost my job. Now it's just husband working. It's increased stress. We see ourselves, going into more debt. Someone like that would totally qualify for the help now, pay later, which is basically saying, hey, I'm willing to commit to you now in exchange for some social currency, right? In exchange for some social currency, and I will help you in that tough time, right? Help you find a new position, help you mitigate your household expenses, like go over everything, analyze everything, take that time, right? And I'm willing to exchange social currency, or we set up a pay later program where it's like, okay, my services are X. Okay, you can only afford this. Got it. So you either pay what you can, or we draw up a covenant agreement that just says, I commit to paying you X at this later time once we get back to a positive cash flow position, right? And we'll declare what that number will be, and then we go from there, right? So this is a service for my community, you guys, those that watch the channel, those of you who are practicing these concepts. You're doing velocity banking, you're doing infinite banking, you're on a roll, doing well, but then something happens in your economy. There's a loss of income, a death in the family, a major medical expense that just really drains you, and you just need that support, whether it's just someone to communicate with, someone to run numbers, run ideas, run strategies, all these different things. So that's going to be my personal solution for what I see coming in the marketplace. So those of you, again, you're practicing the velocity banking concept, you are in the process of acquiring your line of credit, a credit card, a HELOC, a PLOC, a business line of credit, or you're in the process of funding a life insurance policy, whatever it is, in 2024, I expect very similar like what happened in 2020, right? This is all over again. So when COVID hit, 2020, banks were consolidating. So from 2020 all the way to 2022, we've seen a lot of banks either go under, go bankrupt, or they got consolidated, bought out by someone else, right? I think we're going to see another round of that going into 2024, and then maybe even 2025. So I think we're going to see more banks consolidating or shutting down branches, which means job loss for average Americans that work in those industries, all right? We saw in 2020, banks tightened lending. They made it harder to get approved for certain things. They lowered the amount of credit that they were willing to give compared to, say, 2017, 2018, 2019. Or banks that were offering HELOCs, PLOCs, completely, they stopped offering it for a period of time. They withdrew their HELOC product. They withdrew their PLOC product. They were no longer offering it, right? And I think this is going to be a positive for velocity banking users right now, you guys that are practicing the concept. I do believe we will start to see rates decreasing. So there's already been a lot of content already put out that we might see the Fed decrease rates 6 times, and people were like, okay, well, how much is in those 6 times? And people were guessing 0.25% each time. So I don't know if that would occur in 1 year or over a longer period of time, but that is the information that we've seen publicly, and it's been said so many times over that the Fed is planning on decreasing rates at least 6 times, 0.25% per rate decrease over a period of time, right? So I do see rates decreasing or flattening, like just staying the same, right? Now, that will positively help those that are doing velocity banking. This is going to really make HELOCs more attractive for those that acquired mortgages in 2022, those that acquired mortgages around this range, right? Going into, not 2022, 2023. 2023, those of you who acquired a mortgage this year, you're around this interest rate, amortized rate. And you may have acquired more equity in your property going into 2024, right? Or depending on how much you've paid down, whatever that may be. So let's just say that's you. Then going into 2024, we start to see rates decrease. We're going to see banks doing like more intro rate offers that look really attractive, right? So we might see more 1.99 to 4.99 intro rate offers, anywhere from 6 to 12 months on HELOCs, right? So that's going to be very attractive. So those of you who locked in 6 to 8% mortgages and the car loans, right, at these higher rates, and if there's enough equity built up in your property by 2024, it's going to look quite attractive to do this concept. Whereas in 2023 and 2022, we saw rates going up. So we saw rates increasing. And then we started seeing a lot of questions. So myself personally, with new clients that I've been working with in 2023, one of the biggest, objections, concerns was, Denzel, I have this mortgage that I got at 1.9%, 2.9, 3, less than 4% mortgage in 2020, 2021, and then maybe 2022, like these very, very low rate mortgages, low rate car loans, right? And then they're just now discovering velocity banking in 2023. And they're like, dude, this bank has a HELOC at 10.5% or 11% or 9.5%. I'm having a difficult time making sense of borrowing from 9.5%, 10.5% to pay off a 3% fixed amortized mortgage or a 2% amortized car loan, right? Now, me personally, this is me, just my own personal opinion. I'm actually agreeing with those clients of mine. I'm like, yeah, maybe this doesn't make sense. I mean, we can clearly run the numbers and we can force velocity banking to work. But if we compared it to extra payments, the result is just not that attractive. Maybe we're 3 months ahead, 2 months ahead, 1 month ahead, of 4 months, 6 months. Not that attractive, right? And unfortunately, we're seeing more content put out where, and to me, this is just inefficient. You really won't see my case studies on my channel. You really won't see me talking about, using velocity banking with a 10% or higher HELOC to pay off a super low amortized loan. You really just won't see that major gap. There is a point in time, guys, let me be very, very abundantly clear. There is a point in time where velocity banking does not make sense, right? That the math just doesn't play out when you try to take a very, very low rate mortgage, especially if you've been paying on it for the last 5 to 7 years and you've been making extra payments. Chances are that low rate mortgages, there's not a whole lot of interest left on that debt. So it's very, very, very important that if we're going to try and do this concept, that we are running the math 2 and 3 times over, getting a professional opinion, running it over with someone, hey, take a look at this, like really evaluating how the difference looks between an amortized loan and a simple interest HELOC, PLOC credit card, right? So in 2023, there were more cases this year, clients that I work with, where velocity banking just didn't make sense. And so I showed them how to just make extra payments. We used the cash flow index formula, and we just did it old school, and we got plenty of results. So I'm the type of content creator that isn't velocity banking or nothing, right? I'm not that kind of content creator that it's like velocity banking till death do us part. It always makes sense. Like you're not going to hear me say that. You're going to hear me say, how do we actually combine both that snowball and velocity banking, right? Where maybe in the beginning, we're doing velocity banking, get us a boost on those credit cards and that car loan. And then maybe we do velocity banking for like 2 or 3 chunks on the mortgage, but then eventually we stop because it just simply makes more sense to just apply extra payments or don't pay it off at all. And we direct our attention towards the top line, increasing our income, right? So I'm always going to be presenting options, being very, very transparent in how we're looking at things with our finances, right? So recapping, going into 2024, big overall thing, I do see a financial crisis coming. I do see a lot of people losing their jobs, their careers, or husband, wife, someone, getting a decrease in income or reduction. That's what I see on a big level. Banks consolidating, banks tightening lending again, right? And rates decreasing. So it'll be a little more difficult to find that HELOC product because I think banks will just not offer them or remove them off their product list for a period of time. But the banks that do continue to offer them, they're going to get more attractive in 2024, especially for the person that has been preparing themselves. You've been doing all the right things with your numbers. You've been a good steward, you've been paying down debt, you're lowering your DTI, you're increasing your credit score, you're looking more attractive to the banks. You're going to find some really unique opportunities to lock in very, very low intro rate on a HELOC, 6 to 12 months, and you're going to be able to accelerate that 7-8% car loan, accelerate that mortgage, and that's where there's going to be a flip where velocity banking is going to look really attractive, right? So there's times where velocity banking will not make sense in certain economies, and that'll provide some pushback, and this is healthy pushback in my opinion. When I first started in 2018, 2019, velocity banking was looking amazing, right? Because mortgages were still, they were a little bit higher, right? And it wasn't until like 2019, 2020, 2021 where we started seeing the rates drop tremendously, right? And we also saw HELOCs dropping. So those of you that are watching that acquired a first lien HELOC and you locked in a low 3% fixed rate for 3 years, 5 years, you locked in a 5%, you locked in a 4% for 3 to 5 years. That was very, very smart on your part. So you got to enjoy a fixed HELOC line of credit, simple interest at 3, 4, 5-ish, almost maybe 5.5% for 2021, 2022, 2023, 2024, 2025. So your rate's going to expire in 2025. Or if you locked in the 3-year, you kind of already expired either in 2023 or going into 2024. So those people that were used to that low rate HELOC, now your rate just jumped to 9.5%, 10.5%. Guys, remember, we don't have to stay loyal to the bank. We don't have to stay loyal. If you're in a position right now where you have a $150,000 HELOC, a $200,000 HELOC, $250,000, $100,000, and you owe 30, you owe, say, less than 0.5%, less than 50% is owed on your HELOC, and you went from a low rate 3, 4, 5, and now you're at like 9.5. But you've been with that HELOC, you've had that HELOC now for 3 to 5 years. Okay, I would absolutely consider going to a different bank right now, and you can find HELOCs, other banks that are offering these intros for 6 to 12 months, anywhere from as low as 1.99% to 4.5%, 5%. So we can dramatically reduce your interest costs. And that's like, hey, that's an easy move right now for those of you who already have your HELOCs, right? Those of you who've been rolling with your personal line of credit, and that has increased, and you've used your PLOC for the last couple of years to accelerate your car loans, accelerate your credit cards, accelerate some student loans, and now you're just left with the mortgage, right? You may want to consider graduating to a home equity line of credit. And then you may want to consider, okay, do I want to pay off this property early, or do I want to start that business, have some capital to leverage at a low cost of borrowing and get that business up and running and start serving people, right? And now we're increasing the top line. So you may want to consider that, right? So those are my thoughts and predictions on velocity banking, what I see happening right now. In the I also wrote this here, an increase in credibility. So I've been seeing more content creators talk about the velocity banking concept, whether positive or negative, doesn't matter. But that is drawing more credibility to the concept, the theory, the strategy, the method itself. I am also seeing banks welcoming this concept, right? I'm seeing banks create marketing that's attracting people like us that understand how to offset interest. They understand how to take a 8% rate and pay less than 2% when they're paying off a 5% car loan. So they're able to bring, that 8% HELOC down to 2, and that's how they can justify paying off a 5% car loan with an 8% debt tool. That's how they can justify that, because they're like, well, I'm actually paying a net true cost at 2% to pay off this 5. And then when we run extra payments, you're paying a net of, say, 4% or 3.5%. So you're able to say, I'm going to go faster with this, and I retain liquidity along the way in case something happens. I need to reaccess the money that I just applied toward the car because an emergency happened. This person's a little more secure, a little more safe, as opposed to the person that's just sending a bunch of their cash flow to knock down debt. If an emergency happens and they don't know how to borrow in the first place, typically they're going to get the worst loans. They're going to get the worst products, right? And end up paying more interest in the long run because they were initially just sending a lot of their free cash flow towards debt elimination, but then had, life came up. So they didn't have, access to that money again. So those are important things to be aware of. You guys know this. This isn't an advanced session. I'm not really going into like, what is this, what is that? So if you're like brand new and you're like, what the heck is this guy talking about? This is probably not the video for you. This is more so for my clients. This video is more so for people who are seasoned. You understand these strategies, you know what's going on, you're doing it for yourself. Those of you that are brand new that are watching, really just take the predictions that I'm seeing right now and you can, apply that into your notes. But I'd recommend definitely watching some of my starter videos, watching the case studies where I really break down these strategies and how they work, right? So moving right along, in the infinite banking world, right, infinite banking concept, which is tied to whole life insurance, okay, I see some positive things happening in the space that I think will be helpful and might provide somewhat of a challenge for agents, but I think overall it'll be good in the long run. Is dividend rates increasing. So we've seen, those of you who have whole life insurance, we've seen from 2020 till now, right? We've seen dividend rates decreasing and we've seen guarantees decreasing, right? So I'm just going to erase this right here and go into what I've been seeing in the whole life space. So if you're someone that has a whole life insurance policy and you acquired one between 2018 and say 2020, you probably have in your whole life insurance contract, you have a 4% guaranteed rate, more than likely, if you're working with the major mutual life insurance companies. There's really a handful of life insurance companies that work well with this strategy, right? And working with an agent that understands how to design a high cash value life insurance policy. So those of you that did that from 2018 to 2020, you probably have a 4% guaranteed rate. And then on top of that, maybe you were getting an additional 1 to 2.5% non-guaranteed rate. So that's the dividend. Okay. So your gross rate, some of you are probably anywhere between like 5.5 to 6.5 gross rate. But then those of you from 2021 till now that bought a whole life, your guaranteed rate decreased. So in the life insurance industry, the life insurance companies lowered their guaranteed rate that they're paying to policy holders. So that rate dropped as low as 2% to 3.75%, as well as the non-guaranteed dividend rate dropped slightly. So it was, we're still seeing, I'd say no more than 6.1%, I believe is like the highest gross rate that I've seen with life insurance companies, and maybe around this range. But then, although these people that bought life insurance policies with the lower guaranteed rate, what also happened was your insurance expense on whole life, right, decreased. So cost of insurance decreased, which means that even though you're getting a lesser rate of return, your money was actually going a little bit further than the people who got policies here with the higher guaranteed rate because they had a higher insurance. So someone with a $1 million death benefit from 2018, 2020, it would cost them more money to get that $1 million, say a 40-year-old, right, male, okay, versus the 40-year-old male here, they can get that same $1 million, but for less insurance cost, and they're able to overfund their policy with more dollars. So someone with a $1 million death benefit, and let's just say their MEC limit was 50,000. So the max they could overfund it was, say, that number. Versus now, same $1 million. This is not accurate. I just want to get the point here. That same 40-year-old male with the newer policies, that same $1 million, they now have a MEC limit of 75,000. Same exact policy, same exact company, same death benefit. Everything's the same except for the MEC limit amount increased. So you could make the argument that if this person actually were to pay in that $75K on that $1 million death benefit, they would have a higher cash value performance long term than the person that's funding $50K, simply because there's more dollars going in, even though they have a lower guaranteed rate. Okay? So that's what we've seen so far. Now here's what's really cool, and I've been, watching people like Chris Kirkpatrick, Life 180, shout out to him, and Caleb with the AND asset, people like Garrett Gunderson, and other very, very knowledgeable people in the space as it relates to life insurance. What some of them have been saying is this is actually the perfect time to buy life insurance, because the way it's internally designed from the insurance companies, again, your insurance expense is now less for the same amount of death benefit. So if you were, say, an older individual in your later 50s, right? And let's say someone that's 50 years old, right? Let's say in 2018, 2020, you only qualified for the $1 million, and so you could only pay in the 50, right? Versus now, that client that said, oh, I want to be able to pay in $75,000 a year, but they only qualified for a certain dollar amount because of their health, whatever the case may be, or their age, or whatever it is. Now they can have that same death benefit, but be able to pay in more money, getting them closer to that desired amount. And because the insurance expense is now less, the performance of that $75K over the long haul will perform better. So those two things are in the favor of the customer right now for insurance companies. Now, if rates decrease going into 2024, I believe we will see dividend rates go up. So just imagine your dividend rate increasing with your whole life insurance in a properly designed high cash value life insurance where the insurance expenses has been lowered, even though you have a lower guarantee, but that non-guaranteed rate, we potentially see that increasing. So it just makes it very, very attractive. And I believe the way life insurance companies are able to provide that is because of maybe the bonds that they're locking in right now at higher interest rates, right? We're starting to see CDs, savings accounts, money market accounts, and bonds. We're seeing the rates have increased because interest rates have increased. So those insurance companies are locking in those higher payouts, higher rate of returns for, say, 10 years, 20, or whatever, however that works. And in the general account of the life insurance company, they're able to pay out a higher dividend to their policy holders. So I see that being a very good benefit for policy holders today and those that already have had policies for a while. We'll all get to participate in that together. So I'm excited about that, because if you are someone that bought a policy like myself between the years of, say, 2018 and 2020, you were initially given an illustration from your agent that you would earn, say, 6% or 6.2%, 6.5%. But then every single year, you saw the dividend rate decreasing every single year, which means that the illustration that you got provided by your agent is no longer matching what's actually in cash value, right? And I've done videos with my own cash value life insurance policy where I showed people, where I was like, here's my original illustration, and here is an in-force illustration based on how it's actually performing today. And it was like a few dollars off, where it was less than what was initially illustrated. And that's because the insurance companies paid a lesser dividend rate. So you may not be the happiest customer from, say, 2018, 2020, and then even going into 2021, 2022, 2023, dividend rates have been going down. But now those of you who think long-term with your life insurance policy, and you continue to fund them and manage it properly and not over borrow and over leverage yourself, get ready, you're about to enjoy an increase, especially if we see rates decrease. We'll see those dividend rates go back up because lending will be easier in the commercial space, right? Now, I don't consider this bad news, but because of social media and the way these concepts can be misrepresented, over-exaggerated, sold improperly, and these concepts have had a reputation of hurting people, right? That's the reality, is in the velocity banking space, in the infinite banking space, it has a reputation already of people like myself, I'm putting myself out there, people like myself, content creators, gurus, coaches, anyone that's promoting velocity banking or infinite banking. We have to deal with the fact that there are bad apples, bad actors that are misrepresenting these concepts, these methods, these strategies, these ways of thinking, ways of handling your finances. And that has hurt people that weren't ready for this strategy. One of the biggest things in the infinite banking space, right? Whole life insurance, cash value life insurance, high cash value life insurance, becoming your own banker, all these wonderful marketing terms that we content creators use. One of the biggest pushbacks from the anti-infinite banking crowd, what they'll say is, hey, we don't like that you guys are, pushing this product on low-income households. People that only have an extra $300 a month, $500 a month to save. Like, they don't have a whole lot of cash value. This product is being pushed to lower income households, average Americans that, don't understand this. Number one, they are thinking short term. They're misusing this product, and it ends up hurting them more than helping them. So that's the biggest pushback. That they're like, this should only be real higher net worth people, higher income careers like doctors and lawyers and white collar, those that are making six figures plus, those that have really good cash flow, a couple $1,000s a month. I actually agree with them, right? It's not often that I work with clients that are making 30, 40, 50 grand, and we put a life insurance policy in place designed for cash value, high cash value. Very, very rare. The only reason why I would help someone that's making 30, 40, 50 grand a year is if they have a spouse, someone else in the household that's making six figures or something like that, and they want to put a life insurance policy on their children, couple $100, a month, or a couple thousand a year, small policies on their children, or a $10,000, $5,000 policy on themselves, but they have very good stewardship. They have good amount of savings, good credit, good discipline. Like, I go through these qualifications to really say, okay, I'm willing to work with that person. But for the person that, and I work with a lot of these types of clients that are making the average American income salary, and they want to jump right into infinite banking because they saw all the phenomenal content that's talked about it, but they only have $200 a month to spare, $400 a month to spare. And I'm like, hey, those dollars will work more efficiently if we target debt right now, rather than try to do this whole thing where we dump money into the policy and then borrow it out immediately, pay off debt, and do all these, finesse and finagling, which could absolutely work when there's more capital to work with. But when there's not a whole lot of capital to work with and you don't have the discipline, you don't have the knowledge, typically those things can blow up and fail, right? And that's not fun. That's not fun. So regulation coming soon for insurance agents, where agents will not be able to use certain language when promoting, say, this strategy or talking to their prospects on the life insurance product itself. Someone like Chris Kirkpatrick, Life 180, he's created a lot of content talking about regulation coming for agents, something like AG something. It's called AG something, and he's very, very into the protocols and properly representing these strategies to folks, right? Setting proper expectations. Another good channel to watch is IBC Global, or Caleb, or Garrett Gunderson. These are very good channels that are consistently putting out content about life insurance, and they're setting proper expectations, realistic projections on how these things actually work and how it can benefit you long term, right? And again, I also see an increase in credibility coming to the infinite banking space, but then simultaneously, I do see some regulation coming as to how these strategies are represented. Because again, when enough people get hurt financially, some of these people band together and they start reporting certain agents to the proper institutions that launch investigations. And then, it takes a long time, but eventually we see that come in, and that's going to help get rid of some of the bad actors, right? And that's going to help really weed out those that weren't even ready for the product anyways. And then those that are going to be able to, enjoy how these things actually work for them personally, right? Those are my predictions on velocity banking, infinite banking. Let me know your thoughts in the comments, what you think about this. If this was valuable to you. Some of the moves that everyone should be making right now, right? On to my left here. If you are someone, right, that you're trying to pay off debt, trying to do better moves with your money, be a better steward, okay? If a crisis comes, are you prepared? So here's my thing. Here's my personal opinion. That if you're in the process of paying off debt, and you're learning about how to, manage your money, do all these correct things, great. I think what you should have on your priority list right now is to have 6 months worth of expenses outside of your debt tool. So those of you who are practicing the velocity banking concept already, you have your HELOC, you have your credit card, you have your line of credit, PLOC, business line of credit, whatever it is, you should have 6 months worth of expenses outside of the debt tool. I know many of us move our savings into our line of credit and you've been accelerating. Great. I think you should also have money outside of your velocity banking strategy, and that will add an extra layer of protection. Again, this is your personal preference, right? You don't have to do that. I personally, if I'm doing velocity banking, I always have cash elsewhere. In my case, it's in my cash value life insurance policy. So when I'm combining the two together, I make sure I always keep cash off to the side that I'm not incorporating into the strategy itself. So when you hear me talking about velocity banking, I often say, hey, max leverage, 2/3. You often hear me say 2/3 or 66% max leverage of debt tool, right? So if I have a $100,000 HELOC, I really shouldn't borrow more than $66,000. I really shouldn't owe that much more, right? I like to keep 30 to 40% space in my line of credit and in my cash value life insurance policy. So me personally, in my velocity banking and infinite banking strategy, I have a cash value collateral line of credit. So that's my velocity banking debt tool. It's a cash value collateral line of credit. The credit limit is $261,000. I owe $67K. Right? So if we're doing the math, 261 times 2/3 is 172,000. So 172,260 is my max number. Don't leverage more than that. Right? This is how I manage my personal finances, right? So that's my cash value line of credit. Well, on the IBC side, coming over here, I have $358,000 in cash value, of which I secured $261,000 as a line of credit. So 358 minus 261 is $97,000. So there is still, right, so if we did this, 358 times 2/3, 236,280, right? That's 2/3 of 358, right? So when I got my line of credit, I did the same thing, and it still makes all this extra space. So this 97 is emergency fund. I'm not even incorporating that 97 into my velocity banking plan. So again, I only owe the 67 here. The max I will go is this number. In reality, I could go as high as this number, 236,280. I just choose not to do that. I choose not to leverage myself that heavy. So in addition to the 172 of space in the 261, I also have 97 as emergency, not even incorporating it into the strategy. This is what you guys should be. You should be creating this type of tiered protection when you are leveraging debt, right? And this is the biggest pushback for people that are against leveraging debt, that don't see the value in leveraging debt because they see all this risk, right? Which, again, I totally agree with them. I'm like, yeah, if you are afraid of leverage, if you don't understand how to leverage debt to create more income or to offset interest, I don't think you should do this. I think you will mess up. I think you will make mistakes and it'll hurt you more than if you would have just did the traditional method of paying cash for everything, saving money up first, and then deploying it once you've created the capital. But for those that are taking the amount of time required to learn about leverage and how to create positive arbitrage, how to create more income, how to offset interest, and all these different moving parts in your finances, you ought to create protection from yourself. So this is how I protect myself from ever over leveraging. So again, total amount of money saved from 2018 to 2023, this is how much money I've saved total. And then there's earnings in that number as well, right? So I save money. Instead of saving in a savings account, I save it in cash value life insurance. That money grows, it's protected, I have a death benefit, I have a living benefit, which is my cash value. I got the cash value large enough to then go to a bank, create collateral, and now I leverage that collateral to do different moves. But again, I'm never going to leverage more than this amount, right? And I'm always going to keep 6 months worth of expenses to operate. This is like 10 to 15 months worth of expenses for me just in here, right? Before I even tap into that, I have this between 67 and 172. 172 minus 67, right? 105. Plenty of space there, okay? Create this for yourself. Very, very, very important. For those that are practicing velocity banking or infinite banking in 2023 and going into 2024. Very, very important. Okay? Have 6 months worth of expenses outside of your debt tool. Preferably don't have to do it. That's just my personal recommendation. I think it would be of value. Okay? I also would get a 0% credit card that you can just have on hold. Right? You don't have to use it. It's just there. Like, for example, I have a Bank of America credit card, 0%, and it's always for like 12 months. It's just there. Balance transfer fee is 3%, and the credit card credit limit, it's like 30,000 plus or so. Every single month, when I tell you every single month, Bank of America sends me mail saying, hey, you have X amount of space in your credit card. You can use this balance transfer, save money on debt and all this stuff. I barely ever use the card, but I keep it active, and I just know that if I was to burn through all my savings, right? Like stuff, life got real bad, okay? I burned through the savings, I burned through the policies, burned through it all. I would still have $30,000 of additional capital and space to help me through that really, really, really challenging time that I would be in. So I think it's very, very smart for you to have a 0% credit card just that you're not even using. It's just off to the side. It's there. You know it's available. I could, tap into it, or I can, that means you're applying, getting approved for it, and you just have it, right? And usually the bank gives you 90 days or so to leverage the offer. So it's nice because if you foresee a crisis coming into your household in the next couple months, right? If you can potentially see that coming, well, that gives us the period that we need. And then guess what? If no crisis comes, great. Card's still there. It's available. And then typically they send you mail and they give you the opportunity to use it anyway, right? So oftentimes they do that. Increase skills and build strong relationships with folks, okay? If you figure out how to increase your skills, you're going to become more of an asset to your company, to your peers, right? Increase this, decrease liability, right? Increase yourself as an asset to the company, decrease yourself as a liability. By increasing skills, building strong relationships within the company, higher up, management, letting them know you want to win in 2024. How often does the boss, the manager, the regional district manager hear that from a lower level employee that they want to win this year? How often do they hear that, right? Why not it be you? Even if you're not in the desired career that you want to be in, you can share with them your goals and dreams and desires, especially if you're in a decent environment. I get if you're in a toxic environment, then, if you're in a toxic work environment, guess what you can do because you live in a free country? You can pivot and leave. But Denzel, I make this money. Okay, so you're chasing money, or you're relying on money and not your faith, right? So that's a challenge. Where it's like, if you're in a toxic environment where you're not able to grow, you're not getting raises, you're not being treated properly. Like, I have some clients, they know who they are, where I've told them so many times over and over again, I said, you have got to pivot out of that job or career. It's sucking all of your good attitude and motivation and desire. It's just sucking the life out of you. You're not able to get to your goals, dreams, and desires, right? It's draining you so much that you feel like you have no time once you finally get home. So you know who you are. I'm not, calling names, but you know who you are. Or those of you that are watching that are new to this channel, you've been watching for a while, and you're in this situation where you might be in a toxic work environment, but you're kind of chained because of the money, right? And it keeps a roof over your head and that kind of a thing. I really encourage taking a leap of faith, emotional, but also a logical plan on how we're going to take that leap of faith and go into the next chapter of your life. The way that looks like for me is increasing your skills in something, or potentially pivoting into another industry that might be booming, that you may have some starter entry-level skills in, that you could get hired, and maybe there could be a replacement in income, right? So if you're making 50 grand a year here and you can go to this job where maybe it's slightly less or maybe slightly more, or the same, 50 grand, but the work environment's going to be much better and the potential to grow is much higher, you really should consider that. But I think a lot of us have fear, like we're not good enough or something. Like I've talked to clients before where they're like, Denzel, you don't understand. And I'm like, no, I don't. You're right. I don't understand. I'm 27 years old, but if I was in your shoes, this is what I would do. I would be listening to podcasts to and from my job. I would stop listening to music. I would stop watching TV. I would stop injecting junk in my brain for the next 6 to 9 months, pick up a skill, start making relationships with people that make more money than me, that are living the life that I want to live. And I'm going to spend as much humanly time as I possibly can with them. And I'm going to maximize all the free time that I have. And I'm going to sleep maybe 30 minutes less, get up 30 minutes earlier before I start my day to get the right framework, get the right education I need, send that email out, connect with that person I need to connect with to get me to the next level. I'm willing to sacrifice now to have bigger gains later on. So these are the things that you might want to consider, right? Pivot and leave. Build strong relationships. If you're not in a toxic environment, you're in a good work environment, like, now's the time to level up. Now's the time to level up. So many people don't want to work right now. They want 3-day work weeks. They want 4-day work weeks. They want to work from home. They want to, chill and take more breaks and take more vacations. Now is the time to secure the bag when nobody's fighting for it. It's crazy, right? It's crazy. Nobody's fighting for it right now. Nobody's like competing for it. Like, competition is so low in many industries. If you're like ground level employee, if you're at the entrepreneur level, it's totally different, right? But I'm talking like employee. Like if I had to go and be an employee today, I would go find me a high-level entrepreneur, high-performing CEO, and I do everything in my power to get within proximity of that CEO, of the managers, the regional managers, the CFO, the COO, and acquire favor from these people. Favor gives you an unfair advantage in the marketplace, right? Me personally, as I'd say a lower level entrepreneur, multiple six figures, I would say high level are entrepreneurs, business owners that are doing like 7, 8, 9, 10 figures a year. Those are like high level entrepreneurs to me, right? So I'm here, okay, multiple six figure entrepreneur, and then these, you can't even see them. They're like just all the way up here, right? So what I do to increase my value, become more of an asset to those people, right, is I figure out how can I give to that person that has so much, right? How can I give to that person that has so much that they don't need anything, right? I process this. I think of different ways of serving that kind of a person, right? Then what happens over time, I get within proximity of where these people are going. I go to their networking events. I go to their masterminds. I show up on time. I do everything in my power to show up on time. It's one of the things that I've worked on in my years is showing up on time for things, right? That's a cultural thing that I learned growing up. We show up late. Spanish people were always late, right? 30 minutes, hour late to the party. Party don't actually start till an hour after they said to show up, right? It's a cultural thing. So I'm breaking that personally over these years. So being able to show up on time, go above and beyond, give tremendous value, right? All these things over and over again until I get within proximity, and then they drop favor on you. They just drop favor. They're saying, I want to spend time with this guy, right? And then they do things like they bless me with mentorship, or they bless me with more clients, or they bless me with knowledge and wisdom. They bless me with access, right? They put me in rooms I'm not even qualified to be in. They send me clients that are smarter than me, right? On so many levels. I'm like, how can I even help this person? Right? And they're just sending so much value that results in, income increasing, wisdom increasing, confidence increasing, more viewers, more subscribers, more attention, more everything, right? How can you do that as an employee within a corporation, within a company, right? Acquiring favor is one of the most unfair things you could do to gain an advantage, an unfair advantage, right? Because listen, life's not fair. Life is not fair. We know this. Life is hard. Life is not fair. Favor has nothing to do with fair. It's not even it's not a thought that comes in. Favor, whether it's favor from God or favor from high-level entrepreneurs, people that are in higher places than you, it's just favor. And it's a matter of you getting within proximity of their sights, right? With what they're looking at and being blessed. That's a unique strategy. I don't know too many people that talk about that, but that's something I've done for myself that's been allowed me to explode in my content creation and my influencer world, where I now have the ability to text certain entrepreneurs that are just doing 10x what I do in revenue per year, helping 10x the amount of people what I help per year. I can text them and they respond within minutes, hours, right? Not even a whole day, they respond. I'm like, this is freaking cool. I can ask them a question, I can send them an email, I can book time on their calendar. They're willing to give me 25 minutes, they're willing to give me 45 minutes, they're willing to give me an hour. They're willing to give me access to their, masterminds and their courses and their groups. We're talking tens of thousands of dollars, maybe even 100,000+ or more of money that I've saved just because of favor, right? Now, obviously that favor comes with work. I put in the work. I decided to click the record button and put myself out there. I decided to go serve people. I decided to go do ministry, right? I decided to put in the time that most won't, and that results in more favor in the long run. So that's just really, really cool stuff, right? Recap 6 months worth of expenses, get that 0% credit card, increase skills, build strong relationships, can consider pivoting from one industry to another to generate more income, to be more fulfilled, have more joy, right? Develop your leverage capacity limits, right? Watch my case studies, you'll learn about that. And that's my lesson. That's it. All done. Any questions? David says, great strategizing, Denzel. Appreciate the type of advice for the combination of IBC and velocity banking, participation percentages. Absolutely. Glad to help. All right. Does anybody have any questions at all? We've had like 30 or so people in the house tuning in. If not, I'm gonna close it out here. I'm just gonna wait a couple seconds. All right. I'll turn it to the board so you can check this out. Okay. Take your notes. Another thing I can share with you guys, for those of you that are in the process of acquiring a life insurance policy, I have 2 Word documents that I'm happy to send to you. Just email me and tag this video and say, hey, you talked about 2 docs, please send it to me. All right, so I'll share my screen real quick. This is just a checklist as it relates to acquiring a whole life insurance policy for yourself, questions you want to ask the agent, and questions for yourself. All right, so I can run through it real quick. So when you're talking to the agent, have them explain their process to you in detail. Do you have chemistry with the agent? How does the agent handle objections, legitimate questions? Do they respond with anger? Do they pivot? Do they give you some weird analogy about a grocery store, right? Or do they just answer the darn question that you have, right? Will the agent take time to hear your problems and concerns? Does the agent plan on being in the business for their whole career? Like, do they love what they do, or is it just a stepping stone for them? If so, you can ask them, well, who is your team? In case you leave the industry, I just want to know that there's someone else that I can talk to about my policy, because this is a whole life policy and I plan on having it my whole life. I want to make sure there's someone I can connect with, talk to strategize over different ideas, right? Right. So in case they leave the industry, who do you contact next to provide support on your policy or policies, right? For you, am I thinking long-term or short-term? How much cash flow do you have per year? What is your minimum number you can pay in per year with your eyes closed, right? Like if you cash flow $2,000 a month, that's $24,000 a year. You could easily fund a policy at, 5 to 10K a year with your eyes closed. So we could set the base premium to a low number of anywhere from like $2,000 to $4,000, right? Maybe even less than that, which would be like minimum required to pay in, and then you have a desire to pay in $15,000 a year, right? So where do we set that base premium at? Like, we can do it really low. How long do you want to max fund it, right? If you're 30 years old, ideally you should think long term, like, maybe I could probably fund this thing for the next 30 years, right? Build a massive savings plan for years to come. What is the strategy once the policy is fully funded? Are you planning on dumping in a bunch of money and then borrowing it out immediately to go do a move? Okay, what does that look like? Let's run the numbers on the interest costs to do that. All right, what is the strategy while you are funding the policy? Think about these different things before you just go and put a policy in place, right? And these are other products and services. Think of stacking on top of the policy as you grow with the policy. So health savings account, annuity, long-term care, disability, Roth, real estate, estate planning, legacy, wills and trusts. Great things. This just talks about the industry of how most agents design policies. And again, the lower the base premium is, the lower the commission will be for the agent. The higher the base premium is, the higher the agent's commission will be. So that automatically provides an incentive for the agent to provide a higher base premium, which would result in a lower cash value starting for you. So if you're someone that says, hey, I want to have as much cash value as possible in the first couple of years, then you probably don't want a policy that has 40-50% of your money going to base premium. But if you're someone that's like, hey, I would like more death benefit, but also high cash value, maybe there's an in-between, like a 25-75 split or 20-80 split, right? Where out of 50 grand, only 15 to 25% is going to the base, and then the rest to cash, because you want a higher death benefit, or you want to fund for a longer period of time, right? It's all things to keep in mind. This is just a personal opinion of mine. Anytime you're talking to the agent and they're designing a base premium that's over 40% of your dollars, so if you're putting in 100 grand and they put $60,000 towards the base premium, that means day one you're going to have less than $40,000 available in cash value. I don't know if that's advantageous for the person that even has the 100 grand to begin with. I really don't think they are willing to part with 60% of their liquidity for the hopes and potential that 20 years from now there's going to be more money available. I really don't think that happens. Most people I've worked with that have that kind of money, 100 grand and up, to fund a policy multiple years, they want as much of that 100 grand as possible in the beginning years, because they plan on doing so much more with it. This is another document that just goes over the infinite banking marketing terms so that you don't get confused, right? To understand that if you hear any of these words, right, that's just marketing. It's just a marketing term, or it's a branded term, it's a trademarked term. The actual product itself is going to be a whole life. An L100, L95, a 10-pay, 20-pay, 30-pay, right? And these are typically the companies that most agents will use. Mass, Guardian, Penn, Lafayette, One America are like the most popular companies that is used to design high cash value life insurance policies. All right, so again, these are the marketing terms: sacred account, your own family bank, dynamic banking, cash flow, tax-free banking, private banking, become your own banker, infinite banking, bank on yourself, right? Master account, investment grade insurance contract, right? These are just marketing terms. Don't get confused. That's just how they hype you up, right? It's really going to boil down to these boring words right here: L100, whole life, right? That's about it. Here are the infinite banking players. This list, I need to add some people on here, but these are some of the names you'll most likely come across. You got Stephen Gardner, you've got Chris Crone, VIP Financial Education. This is in no particular order. You got the Kwok brothers, right? Seven Figure Squad, Matt Zapala, Kwok brothers, Sam, Daniel Kwok, VIP Financial Education, Matthew Pillmore. You've got Wealth Nation, Carmen and Darius, Garrett Gunderson, Doug Andrew, myself, Chris Kirkpatrick, right? That's Life 180. You got IBC Global, that's Steve Parisi, right? The Money Advantage, Curtis Ray, Nelson Nash Institute, Oregon Cash Flow Pro, James Nethery, Banking Truths, Caleb, Jerry, Kim Butler, and there's more, okay? And then here are the books. There's some really cool books out there on this concept that will really give you a really good framework. All right, so you got Become Your Own Banker. That's like the OG book to probably start with. You got Building Your Warehouse of Wealth, The And Asset by Caleb, Money, Wealth, Life Insurance, The Case for IBC, What Would the Rockefellers Do? That's Garrett Gunderson, Killing Sacred Cows, also Garrett Gunderson, Live Your Life Insurance. Okay, real quick. You want those two documents, happy to send it to you. Just email me directly, right? And, no cost to that. That's just a really nice framework, right? Where it's like I've got no incentive for promoting any of these books, right? Or any of those content creators. I got some cool relationships and partnerships that pretty much know everyone on that list, or I've had the privilege of talking to almost everyone on that list, and I would say those are the most credible people in the industry. Banking concept, I would say those are some of the most credible out there public people talking about these strategies. And for the most part, many of them have a good system, all right, good process, good system. Again, there were some people I'm missing on there. I don't think I added Chris Noggle. He's one, and there's definitely some other people. The list is growing, which is cool. So that just means like more credibility is coming to the space, which is. So with that being said, we're gonna close it out here. I don't think there is anything else to discuss. I think we're completely done. All right. And yeah, I don't see any other comments. I think we're good. I just want to make sure I'm not missing comments here. I'm just going to look on my phone real quick. Let me know if you've got great value. Comment if you got some really, really good value from this. Okay, yeah, I'm not seeing other comments. Great. You did a good job. Well, God bless you all. Again, I'm really looking forward to meeting many of you in person at my first live event. It's going to be awesome. Those of you that are going to be on the virtual, I'll be acknowledging you throughout the event. If you haven't purchased your virtual ticket yet, you're interested, you want to spend and mastermind an entire day with me, right? Let's reach out to me. You can go to my website directly and you can purchase a ticket. And we'll have a blast. David says you should have more people on this broadcast. Yep, you know, over time, I'm gonna keep building, right? It was very good value. Sam, thanks, great information, beautiful, awesome. Yeah, David, I don't think we've had the pleasure of communicating or speaking yet, but it seems like you had some really, really good value. And certain times of the day, there's certain times where I've had 100 people on the stream, different things. But this was more so, again, a more advanced video where I'm already assuming everyone in the room understands what I just went over the last hour and a half. And again, if you didn't, just take the main points of the predictions and you can apply that to your learning as we go into 2024. So God bless you all. I look forward to talking again soon. All right, I'm going to close it out here. Thank you, thank you, thank you. God bless, and we'll be talking soon.
Someone give me a number. How much money do you want to make this year? How can we generate revenue and profits through your skills, gifts, and talents? We can create a bank via the Light Church, let's just say. How the ministry can acquire cash flow vehicles like real estate, small business, service-based businesses to multiply the fruit. We're going to co-invest. The ministry and the members of it cooperatively come together in common unity in a commonwealth system, and we co-invest together, which will remit royalties through a relationship and royalty sharing covenant. And you have to be in the kingdom, right, to receive the services, right? So it's a matter of the church serving its members of the ecclesia. It's like a corporation. We could all become, say, coaches or service providers in the things that we do to the world, and then the revenues and profits, we can collectively come together in commonwealth, right? It's a kingdom of kingdoms, right? We're all kings, so we have domains over which we rule collectively and all together, right? And just get in righteous positioning under the kingdom. Oh my goodness. Something just might break through. I get excited about that stuff.